Hi guys, it's Matt Z from Optimus Futures discussing today the indicator we've built, the multi-time frame indicator, and its benefits to those who are on MT4 and MT5 if you're trading futures or the spot FX. So today's discussion, what I want to focus on how you change your trading on a daily basis, right? So from talking to traders, sometimes I feel that based on their previous day, they decide what kind of trader they're going to be today, right? So they make very, very fast conclusions of whether they had a good day or a bad day. The next day, they can decide whether they come ahead of time and decide whether they're going to be aggressive, or they're deciding if they're not going to be aggressive, they're going to trade a lot or not trade a lot, scalp the market a lot, or just maybe go for a longer term that day. But the idea is really to avoid such thoughts at all costs. You should never decide what trader that you're going to be the day before. Rather, you have to come to the market and you have to see what that day offers based on the method or the indicators that you have built or anything, right? That would give you an indication of what kind of day are you having. And then you can decide whether you want it to be aggressive. And aggressiveness could be also reflected in terms of the number of the contracts that you trade. Maybe it's too volatile for you to trade 5 E-mini S&Ps. Maybe that day you want to trade 2. Or if you're very risk averse, trade 1. If on the other hand you're not risk averse, maybe that day decide that you want to trade more than your regular 5. Again, I leave those options up to the traders because I don't want to affect somebody's risk tolerance, because I think if somebody affects your risk tolerance, wherever you stand on the prism of risk, it could deprive you, right? It could affect your psychology. So that's not my goal. My goal is just to say, look at the markets, have rules, and based on what you see, decide what you want to do. So I'm going to talk today again about all the indicators that I've built that would help you do that. That you could come to the market and you can say, okay, this is a really trending market, so it's a market I can scalp. So you look at it and then you decide what type of trader you are. Okay, so I'm just gonna go, Jake is gonna switch here to the screen. Can they see MT5? Okay, they can't see MT5, sorry. All right, so he's way ahead of me, sorry. So again, we're gonna look today at the ranges today that have occurred and the momentum. Again, I've explained in previous videos, I suggest that you look at all the videos all the time of all those indicators because they change. You have to observe them. What I mean, the indicators don't change. The indicators are always the same, but their values change all the time. So if you were to work with them, you'll realize, how they function. But here, for example, a day like today, where the CTF, the current time frame on the E-mini S&Ps, and I'm looking here at the micros, it was a range, and the higher time frame was a fade, right? Let's look at some other markets. Let me see. I think today the market was rather slow. If you look here at the Russell, you would see that both of them, the momentum was kind of dying out on both of them on fade. Let's look at the NASDAQ maybe. Okay, NASDAQ. The NASDAQ today was actually, if you were to trade that technology, a lot of talk about technology right now. Facebook with their Libra and the cryptocurrency, FANG stocks, obviously part of the NASDAQ. You would see that the current time frame, which is the shorter time frame, it's actually trending, and the longer term is fading. Now, where does all of this play into, what kind of trader you are? Well, clearly, if you look at the daily ranges today and their percentages, and I've explained what these are before, and I suggest you take a look at it, but basically what we're looking at is past what we're going through right now in terms of a range relatively to, I think, the last 10 days on a daily range. So basically we're seeing today that the last bar on the daily range is only 40%. Now, what does it mean? It means you can't be an aggressive trader. Today is not a day for scalping. You know, the ranges are smaller, it's choppier, definitely longer waiting periods. So if you're a scalper, you reduce the number of contracts that you trade substantially and you just stay in them a little bit longer. And that's what I mean by, you know, looking at the markets, looking at the indicator, and then deciding what kind of trader you want to be today. Let's look at, you know, let's go back again. You see the ranges today are very small. They're today's daily range, the last day was only 46% of the average of the last 10 trades. Here, Dow even lower. NASDAQ, you know, same thing, lower. Now, one thing I want to point out here, for example, you know, it's a nice chart of the Dow over here. These things, just looking at a naked chart, they don't really tell you much, you know, in terms of what kind of trader you should be today. It really shouldn't. It doesn't. You don't know what relatively to what it is or what's anticipated. But here you can take a look and you say, okay, you know what, here I could be a little bit more aggressive. Over time, what you will see how these change. Clearly, when I'm doing the video, those things, you know, they don't change much. We're near the end of the market session, the end of the day, but they will change over here throughout the day. So you could encounter a certain volatility, for example, on the 1 hour range. Now it's only 241% the last hour relatively to the last 10 bars. And you might think it's a lot, but it's not. It's really not, because you would see that on very volatile days, I've seen it as high as 900%, meaning the volatility of today's market, or dead days market, was amplified by 9x, which is a great market to be a little bit more active, you know, not to just sit on it, but rather, you know, with the ranges to go long and short a number of times, and for what I should say, the potential opportunities. The same thing, you know, if you look here, you know, you have 221%. It's not much, you know, it's only double the volatility, the last 1 hour range. And here you have a little bit more, you know, this is on the Russell. You have here, you would have a little bit more opportunity. And this is what I mean. You can actually take this indicator, walk through all the CME group markets, and also decide what market is better to trade today. So what we're seeing on the mini S&P, the Dow, the NASDAQ was really not a great opportunity today. But again, I should say potential opportunity, because you still need your, you know, the volatility doesn't necessarily dictate, you know, profitability, but it will dictate what you should encounter in terms of the number of trades that you should be doing that day. So again, here it's a market to be a little bit more active with, because it's almost at 400%. So again, this is the Russell, this is M2K, and this is this is M2K is the micro Russell. So this was a good day to be in it. That's basically it. You know, I look forward to showing you the next videos and explaining how it works, how those things help you shape yourself as a trader. That's it for now. It's Friday today. I wish you a good weekend, and I'll see you in the next videos. Take care. All the best.